daytradersdiary.com. In this video, we are going to learn three best trading strategies for the day traders. For day traders, it's very important to learn what's the best strategy, what's the combination of indicators or price action settings that can ultimately make you a winner in this course. So basically, these three strategies are very convenient for you to follow, and as per your trading style, you can adapt to them. So let's get started.
Okay, so the first strategy is session-based momentum trading strategy. In this strategy, we prefer trading the overlap of New York and London session. So on 15-minute time frame, we have to mark uh, a range starting from the London session open until the New York session open. Okay, so here is the range ending actually here. Okay, so this is a good point to mark the trigger lines if you want just to extend. Okay, so we have already established a range that could help us trade the momentum. So here the British pound to dollar, it just initiated an upside momentum, breaking out of the range that was the high of the day, high during the London session, and it broke out during the New York session. So here was your actually buy position. When the market has clearly broken out of this range, you can mark your entry, and for the stop loss you can just maintain below the low of this candle and keep your trading take profit around 1:2, around 1:2, or you can also look at if there is any support or resistance level. So if you mark like this, okay, so this is actually a 1:2. Okay, so this is how it triggered the take profit. But on the next, since you are a day trader, so you must be looking to close the order on the same day. That actually you can do wherever you want. Basically you can trail your stop loss as well. So this is our first trading strategy. Okay, so now moving to second trading strategy, which is mean reversion. Okay, for mean reversion strategy, you must have a broad range maintained in the market, and it could be usually off the active hours. For example, it could be the late London session, or it could be in the Asian session as well. So what you do is mark the range. For example, here I see this is the high, mark a horizontal line, this is a low, mark another horizontal line. Okay, so whenever price moves towards the lowest range, you can put a buy order and look for a take profit to the upper extreme, upper boundary. Similarly, if the price goes near the upper boundary, you can take a short sell and look for the lower boundary area. You can mark your supply zones and demand zones within this channel. For example, here is a supply zone. Similarly, I can create a demand zone. So now it's more sense making to you. Okay, so here you see the price touches the demand zone, here you can buy and wait for the price to move up. Again, there is another buying opportunity. Here there is a selling opportunity, then buying opportunity. So this strategy works when there is no clear momentum or no clear trend in the market. All right. Okay, so let's move to the third uh, third strategy. Okay, this is a scalping strategy that you can do in single time frame. You can opt for 5-minute time frame. Again, look for a market when the price is gradually moving in a tight range, not in a broad range. For example, here you see this range. This entire range is very small. Since this is a scalping strategy, you can book your profit with few pips, like 5 to 10 pips could be your TP. Same way, this could be the stop loss as well. So whenever the price moves in the down area, look for a confirmation for the upside. For example, the price moves here downside, then it forms a good bullish candlestick. Here you can enter long and wait for the market to retrace up to the upper range. Similarly, if the price has reached near the upper trend, but you find a good bearish candle, you can always look for the downtrend and put a short order here. So that's all for now. Thanks for watching. See you in the next video.